This morning, we have more important Ask It Early questions for our financial contributor, Ray Martin. And we're going to start with Julie DeWitt, who is live on a webcam this morning. Julie, good morning. What's your question for Ray?
Good morning. Good morning, Ray. My question is this. My mom lives in assisted living, and my sister and I are helping to pay her expenses. And we'd like to know what would be the best way to handle this for tax purposes.
Smart.
Well,
that happens more and more and more. Thanks.
That's a great question, and about a quarter of the adult population are helping their parents in some way, shape, or form. Don't give the money to your mom and then have her use it to pay for her facility fees. Instead, you should pay the facility fees directly from yourself. When you do that directly, it sets you up for a triple tax benefit. First, it's not taxable as income to your mother and not gift taxable to you when you pay the facility fees directly yourself.
Right.
Second thing, when you pay medical expenses for someone, you can include those as an itemized deduction on your tax return.
Wow.
It's got to be more than 7.5% of your adjusted gross income. But if your income's around 50 grand, you pay 14 grand in fees, you could have a $10,000 tax deduction on your tax return there. Wow. And third, if you pay enough of these costs for your mother, you may be able to claim her as a dependent on your tax return if you're paying the costs directly. People think they can only claim children as a dependent on their tax return. You can claim a parent if you pay more than half of their support and their income is low enough.
Wow.
So you got a trifecta of tax benefits here if you pay the facility fees directly.
Wow,
Julie, that's great, isn't it?
Well, thank you.
You're very welcome, Julie. Great to see you.
Thanks for the question. Our next question comes from an email from Anna Simber in Shokin, New York. And the question is, we received a large tax refund, over $5,000, and want to use it as an emergency fund. We want to pay a decent rate, but still have access to the money. They want to be able to get some kind of bang for the buck if they salt this away, but still have access to it. What is the best place to put it? That's a good question.
All right. I'm going to assume, Anna, you've been a good doobie here, and you've got an emergency fund of 6 months or more of living expenses already set aside in the bank, and we know it's not earning anything there, okay? But it's got to be liquid and accessible. I'm assuming you've done that. I'm going to assume you have no high interest rate credit card debt. I'm going to assume you paid down all your credit cards. You don't have an auto loan. You paid all your debt off. I'm going to assume I'm going to assume you're maxing out your 401k plan to get the most company match from your employer, even maxing out to pre-tax maximum. You're doing all that. What would I recommend with $5,000? Put it in a Roth IRA. Okay, you can contribute up to $5,000 to a Roth IRA, and you can get your principal out anytime with no taxes or penalties at all in a Roth IRA as opposed to a regular IRA.
And do you have access to it all the time, or is that one of those 30-day?
All the time.
Okay.
And if you open a brokerage account in a Roth IRA, you can invest in certificates of deposit, mutual funds, exchange traded funds, stocks, bonds. You can buy emerging market funds if you have a longer term view and you want a lot of growth, or CDs in a bank if you want to keep it careful. And there are tax benefits here. It grows tax-free. If you withdraw in retirement, it's all tax-free, including the earnings.
And that's $5,000 a year.
$5,000 a year you contribute,
Okay.
and the income limits to qualify are pretty high.
All right, Ray, hang on. Here we got our last question is again live via webcam. Nicholas is in Kingston, New York, with a question about 401ks. Good morning, sir.
Good morning. Yeah, I'll be switching jobs in the near future, and I would like to move my 401k over without losing any contributions. How can I go about doing that the best way?
Nicholas, the answer is yes, you can move your 401k to your new employer's plan. Most new employer's plans, where you go to your new employer, allow you to roll over your 401k from your old employer into your new employer's plan. You just got to get the instructions from your new plan on where they'll need to receive the money. Call up your old plan's record keeper and say, I want to roll over to my new employer's 401k, fill out some forms and paperwork. They wire the money, or they'll send you a check payable to your 401k plan, which you'll then send into your new employer's plan tax-free, and then you continue your contributions into your new employer's 401k, and you've already got a head start because you got your old balance in there. So you can absolutely do it, and it works great.
How easy is that?
All right,
Thanks, Dave.
Thanks,
All right,
Nicholas.
you're welcome.
All right, terrific. All right, thanks, everybody. Ray,
Thank
as
you,
always,
Ray.
do appreciate it.
Yeah, you're very welcome.
And if you'd like to ask Ray a question of your own, just go to our website. It's earlyshow.cbsnews.com.